What's going on, YouTube? My name is Graylan Stewart. I am an entrepreneur, real estate investor, and a virtual wholesaler. So if you don't know what wholesaling is, wholesaling real estate, definitely tune into my channel because I do talk about it a lot because that is what I do full time for a living. I do have a very small team and we buy and sell contracts nationwide. So wholesaling real estate is a great way to get started into real estate, and it's a great way to sustain a business if you want to make it one. So today I'm going to do a video on telling you about the top 5 list to pull. And obviously this is just my opinion, and this is what has worked for me in my business. And this also, I'm telling you from personal experience, and that's kind of what my channel is all about, is kind of telling you the truth in wholesaling. There's no fluff, no hope or dreams or making things up. It's just, this is what I do every day, and this is what works for me. So, and also these lists that I'm about to go over, it is the top 5, and it's the 5 that have worked for me the best so far. And what that means is, everything that we do, we track. So whether it's the phone number that we track, so we know what type of marketing it is, but not only that, we also track the type of list that we use so that we know what's really working, and so that we can tweak or make changes or go all in on certain things and maybe drop some certain things as well. So these are the top 5 lists that actually work best for me. And I will tell you the one I'm going to put on here first. And actually there's a few of them that kind of have a common theme that you will notice. That I would say that most people that I've talked to, most other investors or wholesalers that I've spoken to that actually do decent volume would probably agree as far as the best list goes. And I will tell you, there's so many lists that you could buy. Because you have like an equity list, obviously, you have absentee list, you have vacant list, you have pre-foreclosures, you have divorcees, you've got water shutoffs, you've got electric shutoffs, you've got, of course, mortgage foreclosures, you've got tax delinquents, you've got, what other kind of lists are there? There's so many out there. There's just normal owner occupied, with equity, which is no motivation typically, but still it's a list that people do. But there's a ton that I'm even missing that you could possibly and potentially get. There's probates, pre-probates, all kinds of different things. But I'm just going to share with you the top 5 that has worked for me over the last couple of years since I've been wholesaling. And we'll just dive into it. So the first one I'm going to put on here is called equity absentee. That's what I call it, okay? So I'm going to write this on here so you guys can screenshot it if you want. Hopefully you can see that fine. Equity absentee. So what does that mean? So obviously in wholesaling, unless you're doing a subject to or something like that, but in wholesaling, typically we need equity because that's how we make money, okay? So obviously wholesaling is when a seller, a motivated seller, is willing to trade equity for time and convenience that we provide as a wholesaler, okay? So what that really means is if the house doesn't have equity, then we probably can't make a deal out of it unless, like I said, you're trying to do subject to or short sales or things along those lines. But as far as just a traditional wholesale deal, if it doesn't have equity, it's not a deal, okay? So how much equity do we need? I'm glad you asked. So basically, most investors want to have 25% equity after everything, okay? So what that means is all in, they need to be 75% to ARV or loan to value, okay? So the reason that most of them want that, not only so they can make money and have their equity, because they're investors and that's what they do for a living as well, but the main thing is, and the reason I know this is because I'm a cash buyer as well. We definitely flip several houses every month. I do keep houses for rentals. I've got a dozen or so right now. And of course we wholesale, a dozen or so every month. So the reason I know this is, they need 75% to ARV because that's what most banks will loan you. Okay, as an investor, you typically go to the small mom and pop banks because they're the ones that are more likely to give you a loan, a smaller, an investment type loan, in your community. So they're typically willing to give you 75. Some of them are 70, some of them up to 80, and it's different, depends on where you live. But for the majority of the banks and probably majority of the nation, it's about 75% to ARV. Okay, what that means is if there's a house that's worth $100,000, the bank's probably going to give you $75,000 for it. Okay, so that means we need to buy it low enough to where they can still put repairs in there and we can still make our profit. That's why typically if we buy 50 cents on the dollar, that still gives them room to make money after they do repairs, and still gives us room to make our $10,000 or $15,000 fee. Okay, so when I say equity, that's what equity means. That means there's still money to be made on that house because they owe less than what it's worth. Okay, so if the house is worth $100,000, let's say they owe 40, and we buy it for 50,000, then the seller's going to make 10, and let's just say we're going to make 10, and maybe the house needs 15,000 in work, so the buyer is going to buy it at 50, then they're going to put 15 in it, makes it 65. So then that's a good deal for them because they're getting 65% of ARV. That's just an example, but typically in that scenario we would probably want a bigger fee, But anyways, that's in another video which we've done. So this is talking about the list. So I'm just trying to explain equity to you. So equity, absentee. Obviously, absentee means they do not live in the home. Okay, so that could be an owner that lives next door to the house, or an owner that lives in a completely different state. Okay, all that means is the house has equity and it's an absentee owner, meaning the owner doesn't live in that property. Okay, so that's the number one list that probably most wholesalers will tell you. Now, when I say that, that's also probably the most paid for list and the most saturated list. So be careful. Although it is an amazing list, it is the list that everybody gets, But there's so many out there. Don't worry about that. Don't let that hold you back. Just get the list, okay? It's a good list, okay? So equity, absentee is my number one on there, okay? So another one, I've got these written down, is tired landlords. So let me write this down real quick. All right, well, what do I mean by tired landlords? It's very similar to equity absentee, to be honest. And some could argue it's probably the same list, potentially. So when I say tired landlords, what that means is it's typically a landlord that they ended up landlording by accident, a lot of cases. For example, they had a house that they didn't sell when they found another house that they bought and they could afford to kind of carry both mortgages. Or it's a house maybe that they paid off and then, their family grew or whatever and they moved on, or they inherited another house that they moved into, whatever the case is. They have a second house, okay, is the point. Obviously they don't live in it. They're a tired landlord, meaning they're tired of being a landlord because they never wanted to be a landlord to begin with, but they just happen to be stuck with the house that they're landlording, okay? And a lot of times they're getting below market value rent. So that's opportunity for us as a wholesaler and for our end buyer, because there's potential to add value to that, to the property for one, but also to the rent rate, okay? So tired landlord, it could be the very same list as equity absentee list, but we know because there's a bunch of ways to pull these lists, and I'll go over that in some videos in the future on how to exactly pull some of these lists. But a tired landlord list to me is exactly that. It's just a list of landlords that it's maybe they own one or two other houses, that kind of thing, and they're just tired of dealing with rentals. They're not really into trying to collect rent every month. They don't care about it. They're not doing it to make future money and that kind of thing. They're really sick of it, okay? So tired landlords is what I call that list, and that's one of my favorite. All right, so another list that I'm gonna write down for you is vacant homes. Okay, now there are a couple of ways to get a vacant list, and really the source to get vacant properties is directly from the post office. Okay. Now, I don't mean you go down to your post office and ask for a vacant list, because they're probably going to laugh or not even know what you're talking about. Okay. But that's where the source comes from, and there are, like PropStream, if you have that, you can definitely pull a vacant list from that. Also, you can befriend your local postal worker, your actual postman in your neighborhood, or in a neighborhood that you think has a lot of vacant or abandoned type homes, or distressed homes even. You could always just give them your card, give the postman your card, and say, hey, if you ever come across a home that you think is vacant, of course they know, because they're not delivering mail there, just say, hey, write the address down. If I'm ever to buy that house, if I'm ever able to buy that house, I'll give you $500 bonus or something just for helping me out. And a lot of times they'll be willing to do that for you and help you out, because they're going to make some extra money. So that's one way to get the vacant list. It's a smaller list. It's a driving for dollars list, basically. But the easy way is just to, you could drive for dollars just on Google Earth or on all kinds of different, platforms, or you could just buy a vacant list from PropStream or something like that. But vacant means, nobody lives in a house. So obviously that's perfect scenario for us, because, that's a house that nobody cares about, is really what it amounts to. And a house that somebody's paying for, or they're not paying for, it's causing them some kind of stress or something, probably. So vacant house is key a lot of times to what we do. So vacant list is a good one. Another list that I love is what I call sweet spots. Okay, and I'll explain. All right, so what I call sweet spots is really, you're kind of looking at the data in your area, and you can get that from your county assessor. You can get it from, PropStream. You can get it from ListSource. You can get it from just about anywhere. And really, what it is, you're trying to find all the houses that have been flipped in a certain zip code. Okay, so for example, if you're kind of targeting a certain area, a certain city, rather than getting a list for that entire city or even the entire zip or area, what am I thinking of? The entire county, you can narrow it down to just zip codes. So if you wanted to just, like for example, if you had a smaller budget and you wanted to do direct mail, for example, but you don't want to do the entire county because you don't want to mail 30,000 postcards or however many's in there, but you just want to focus on a couple of zip codes. So that's what I call sweet spots. What you're doing is trying to searching out all of the zip codes in that particular county, and just looking at the most active areas as far as all the flipped houses that's happened in those areas, and those are going to be your best areas, because that means that's where cash buyers are buying the most. So that's where you want to try to find houses the most, okay, to wholesale. So I call that sweet spots, because you're kind of looking for those sweet spots, those little pockets of areas, specifically in specific zip codes in your local area or wherever you're trying to wholesale. Okay, so another one, and probably my most favorite, is tax delinquent. Okay, I'll just abbreviate that. So tax delinquent list is awesome. It is harder to get sometimes, and never buy this from a third party, in my opinion. Of course, every list that you can do, if you can get straight from the source, it's always going to be a better list. That's just the way it is. Because anytime you buy a list from a different company, it's always going to be kind of, a used list or a little bit late. Even PropStream, if you get their list, it's not like they just pulled the list as soon as you search for it. They could have got it a month ago. So it's going to be a little bit older than what you would potentially want. But they're still good lists, so don't get me wrong. But anytime you can buy directly from the source or get it directly from the source, that's your best bet every single time. So tax delinquent list, you can get straight from your local county, okay? Now, every county across the USA obviously are different. So what you can do is you can call the county, and a lot of times they may not even know what you're asking or what you want, but you just got to be diligent and persistent, just like we do with sellers, follow up, try to find out the right person, and somebody eventually will know what you're talking about. Just tell them that you're looking for a list of all the properties that are behind other taxes. Okay, that's a good way to ask for it. And a lot of times they won't know. You know, I called around forever in the local county that I was trying to hit, and finally, when I was in that town, I just drove to the courthouse and I asked in person, and I got to the right person after the second try of asking. It was on a completely different floor and everything, but they helped me, and it did cost money. Sometimes you'll get it for free. Sometimes it might be $50, $100, whatever. So my particular county was $125. And they actually just emailed it to me. Their IT department emailed it to me. So I just left them my email. Obviously, they only take cash, so I had to go to the ATM and get some cash, paid them the money, and a couple hours later, I had it in my email. So that's how you do it. But I will tell you, when you get the tax delinquent list, that's also the hardest to figure out and dwindle down. So the way that list comes across is super confusing, and it's got so much more data than you would ever need or want. So what you'll want to do is you'll want to do this yourself initially, at least on one of them. You want to delete all the things that you don't want, because really all we want is the property address, the the mailing address if it's different, and then the owner's name, obviously, and then we want to skip trace to get their phone number and email addresses. But it always gives you tons of other information that you just don't need. So you just need to delete those columns that you don't need. And you can even have a VA do that or whatever. But once you have that list, it's really good, and it's probably a pretty sought after list too. But to be honest, everybody buys these lists. I mean, there's no secret. So it's just a matter of who's going to work them the hardest and who's going to actually do something with them once they get them. Who's going to spend their money on the correct skip tracing, all those kind of things. So everybody can have the same list but have different data and have different results, because it matters what you do with those once you have them, okay? Not just having them does nothing. So anyways, the tax delinquent list is really good. I'm even still using a list from 2018 that we still get deals from. So yeah, it's kind of old now, but at the same time, usually if people are on the tax delinquent list, unless they lose their house to the auction that year, they're probably going to be on it every year. You know what I mean? And obviously there's more that add to it every year. So I always buy updated lists and just kind of do the rest, but I'm still using some from 18. And that goes the same for every one of these lists. I mean, they're all still good lists. You don't have to, and that's one of the myths or I think the false information that a lot of gurus put out. And I don't know if it's because they have third parties that, give them spiffs or bonuses or whatever, all these different things, but you don't have to buy new lists all the time. That's crazy. Why would you buy a new list? And that's for another video too, which I'm going to make. But nevertheless, this is what this video is about. It's my top 5 lists that I like to do, that we actively pursue on a day-to-day basis in one way or another between the different marketing channels. So that's kind of my 2 cents on the best list that you can buy. So definitely, if you haven't bought these lists, or if you have questions on how to pull these or what they really mean, definitely drop me a comment. I'd love to share with you and try to help you out as best I can. So please like and subscribe if you haven't already. I definitely appreciate it, and continue watching my videos for more content. We're almost at the end of 2020, so 2021 is almost here. Now is the perfect time to be buying these lists so that you can get ready and start marketing for 2021 so you can have a great year. All right, so that's all for today. Thanks a lot. I appreciate you tuning in. Please like, share, subscribe, and I'll see you in future videos. Thanks a lot.